And Salah, welcome back to F.A.C.E.
Hi, my man, Dale. How are you?
Okay, how are you? Is it really your birthday today?
No, it was yesterday.
Oh, okay.
I
That's why
was.
you're all right. Well, all right, belated. Happy birthday to you. Happy birthday to you. Happy birthday, Salah, my trading warrior brother. Happy birthday to you. And may this year be green, buddy.
So great. So also, thank you. It was lovely, Dale, my
I
boy,
hope
my
it's
mate.
one of your best years ever and in all ways. So, uh, what's on your radar?
Oh, there's a bunch of things on my radar right now. I heard that you talked about the PPI, and I was expecting that we will stay on that level that we have been previously seeing. And
Yeah.
it's actually the fact that we are still on the same level. And actually, the topic is, and the story will still be the inflation topic. I mean,
Okay.
again, we see that there is a huge pressure. I mean, to be honest, without making the deep dive, look on supply chain
Yeah.
in on the world, look on energy prices that we have been talking, not only because of the tension that we have seen between Russia and Ukraine. So there are many factors that still drive inflation, and whether it's transitory or not, I don't want to discuss this topic because it was so much.
Yeah, it's been beat up.
Exactly,
Yeah.
beat up so massively. But if we just look on the market, we see that there is a big divergence between what is the market expecting to be the inflation in the next upcoming years and what it is right now. I mean, if we look on the tips, I made a small tweet days before, which I just give me 1 second, where I just actually compared what we have been seeing in the tips and the treasury.
There's tips, 10-year tips right there.
Exactly. They are right now almost at minus 0.69, so 0.7. And real rate interest rates are almost at almost at -7. So the market is actually expecting that inflation will be decreasing significantly in the future, while actually this gap between the real rate is really high. So one of these charts would be wrong in the future. Either the market itself, because the estimation led by the tips shows us that we see a decrease, or we will see a much higher inflation, and this could increase the rotation on the markets. Actually,
well, let me ask you this, Ella. Yeah, you're really kind of well versed in the fundamentals of markets. Do you think central bank policy, especially the Fed, BOE, is going to be successful by creating a pretty nasty recession to bring prices down? Are they going to have the stones to stick with it, because that's what it would take? Would be a pretty ugly economy to get people to stop buying food, right? I mean,
right,
how are rates going to correct any, like, besides supply chains, just the agricultural commodity markets, which are on
exactly.
fire? How will that work out?
I mean, everybody knows the most powerful tool that central banks have is the power of communication. So,
Jawbone it.
absolutely. So, what I think is it will be a tough time. So, it will be not, we are talking about interest rate hikes in the US, let's say 2, 7, whatever. It
Do you
depends
remember the
on.
statement, or am I, dating myself prehistorically, where they used to say 2 steps, which are like 2 hikes, 2 hikes
Yeah.
and a stumble, that by the third, the things were starting to cave, that it
Right.
became too much medicine. Do you think that would apply to what we're facing here?
Absolutely. This is a nice anecdote. Absolutely. Totally agree. And I think
That's what I do. Anecdotes.
Perfect, perfect. And that's why.
And also James, I will keep my day job. I'm not going out on tour anytime soon, so that's it. I hope you recorded it. So yeah, go ahead, Salah.
Yeah, and this is what, to make a long story short, in terms of monetary policy, I think it will be a tough time for central banks. Everybody's looking on the Fed. How are they going to stick to this aggressive move, or are they going to change? So everybody's looking to the Fed. And I think it will be a tough time. So they will use the tool of communication. I mean, the power of communication. And this is where I believe in. But of course, inflation is the big topic. There's no other discussion about it. There will be rate hikes, and we will see a rotation in the market. Actually, we already see the rotation in the market. Let me just take something out here.
You mean from value and tech?
Exactly. And if we look, actually, the first month of a year is really important for me. I don't give outlooks before the end of January.
Okay.
Because
as January goes the rest of the year.
Absolutely. Maybe people out there, they would say, oh, this is a funny thing. I don't believe it. But there are a lot of factors and variables that I look on, like this December low. December low should not be crossed in the first 3 months of the upcoming year. And we see that the Nasdaq, for example, all lost their December lows. The first 5 days have been really shitty on the market. The January performance was bad. So there are a bunch of indicators that we use from seasonal patterns, for example, that show us that this year started really bearish, and we are in a midterm election year. So there's a bunch of factors that drive this rotation, and we see it going back out of tech into value, like you said, or energy. For me, commodity prices and commodity will be really important this year.
You know, that 15.5, before we get away from it, looks like an excellent bull bear line that, you know, if you're above it, you could be long. If you're underneath it, you're short, and you use it as a pivot to trade against. I mean, just looking at this now, if we rally to 15.5, I might try a short up there.
Exactly, to pull back, and absolutely, this is what I'm looking for, and this is
a great looking pivot I haven't seen before. And you're the first one to come on, Salah, to talk about January being a harbinger. I've been hearing that for years. Always, you know, people even nail it down to each day of the week equals, I don't know, a month or a quarter. Some people have different variations on it.
Absolutely. And one other concern that I have, if I look on the down Friday, down Monday effect or event, so make it clear, if we see a bad Friday or a negative Friday following, or a Monday following up exactly also negative, this might be a warning signal for the market. And this year we had already a down Friday, down Monday. This was actually an additional January bad bias, showing you exactly, oh, there is a warning signal coming. And what did we see? Friday bad, 7th January, Friday bad, Monday, 10th of January was bad, a wonderful turnaround Tuesday, and then it was going down. And exactly Friday and this Monday, yesterday, was also a down Monday. So we get a second warning signal already. Sorry, I need to correct it. It says 11 January and 14 January. No, it's February, of course. But we see already a second warning signal here, which is, additionally making some concerns for me that stock markets will be under pressure and still stay under pressure. And fundamentals are now really important. I mean, the last 2 years, if you would start trading 2 years ago, everything was going long. It was a wonderful dreamland for everybody to go on the stock market. And now you will see a bunch of fundamentals will care. I'm a technical analyst, so the majority of my filter setups and trading ideas are based on technical analysis. But anyway, if you look on Netflix, Facebook, or Meta today, all these tech companies will be under pressure. Everybody will check their guidance, check their fundamentals, whether they are profitable in the future, whether they can be against this pressure or not.
Yeah, definitely. That's where most of the damage has taken place. So I got a question from an attendee. What can I explain turnaround Tuesday? So I'll give them my definition and you confirm it or add to it. Turnaround Tuesday is just a trading pattern that if you have a market that closes strong on a weekly basis, which is Friday, you normally get follow through in that direction on Monday, and possible fades occur on Tuesday. And, it depends on your time zone, but, last night in Europe was a pretty good turnaround Tuesday in Europe, how they turned gold around and all the invasion, they unwound the invasion trade. Is that what do you believe in turnaround Tuesday, Salah?
Yes, I observe it, and I use it also for my trading. And
okay, well, that's enough. If you risk money on it and have it be, part of your, well, it's Tuesday, maybe I should be looking for something to fade, then yeah, if you risk money on it, you must believe it.
Sure, absolutely.
Right? Yeah,
absolutely. And
so I'm sorry I went off on a tangent, but where were we on this? So you're talking about the Aussie now?
Yeah, yes, I checked the Aussie, and I have actually I created a trading idea now in the Aussie. We have an inverted head and shoulder formation. Actually, we spotted it. Yeah. And what we now see is actually a chart book pattern. Why? Because we have seen this breakout. I'm trading now more than 14 years. This was one of my biggest mistakes in the past, saying, wow, it's the breakout. I'm gonna take it now, but I was always too late. But you need to wait up. This breakout was good, but the confirmation now is the pullback back to the neckline that we have seen now. This is one opportunity or one setup for me to take at least short-term longs on Aussie dollar.
Do you think the dollar has peaked? Is that what your work is telling you, or is there one more hurrah on the dollar here, Salah?
I don't think that it peaked for this year. I think there is still potential in the dollar, but at least on a short-term basis, if I combine it now with technical analysis, with seasonal analysis, and with this fundamental push of commodities that Aussie dollar can have as a strength, I see a possibility to have at least a handle above 0 spot to 72.
Okay, you're looking for it to take out the recent high we had before the pullback.
Exactly.
Okay, got it.
And what I want to show the audience as well today, if we look on the Bouhmidi bands, Dale, you already know them, and you can use them by TradingView actually for free. You can use the script. If you type in Bouhmidi bands, you can just put them in your chart. And what we can see today, again, we had nice reversals in the DAX, and this shows me that we see a nice turnaround Tuesday today, a bullish momentum, but still there is concern about this.
Look at the gap. All it did was fill the gap to the left.
Exactly. So maybe just give me 1 second to explain the Bouhmidi bands. This is an implied volatility indicator. So you have an upper Bouhmidi band and a lower Bouhmidi band, which you can calibrate, but now it's based on 1 sigma, so 68% probability that we close the day in the bandwidth. Yesterday, we broke out. We didn't come back to the bandwidth. Okay, this can happen, of course, with extreme fear or euphoric. But what did we see today? DAX started in the morning positively through this decrease of tension between Russia and Ukraine. We had it up immediately to the upper Bouhmidi band. We tested the Bouhmidi band and we reversed back into the bandwidth. Now, with the upcoming start of the US opening, we have seen a second bullish momentum crossing the upper Bouhmidi band. And what we can see now, we reversing again back into the bandwidth right now. We just need to see what is coming with US opening. So what you can see is you can use the Bouhmidi bands on an intraday basis to spot invisible support and resistance, because this is really important to grab this information, because I'm creating this indicator by using implied volatility indices, like here the FADAX or in the S&P 500, the VIX. And
I'd like to be in the Bouhmidi band. I play lead guitar and sing.
You see?
What do you, you know, I wanted to ask you something for my edification. Why do you use 34 close RSI? How did you choose 34?
Okay, good question. I use 34 because it's a Fibonacci number.
Okay.
Number one. And B, I want to be out of the box. And C, I tested statistically, I tested this 34 handle. It helps me a lot to spot for me my own setups. What I do is I don't look on oversold and overbought. I just
look for divergences.
Of course, I look for divergences, but I look also on a barrier that is really interesting for me, which is the 80. Oh, sorry, just let me check. Which is 48.5. Let's see. So really easy to say. If we are above this barrier, we are on a bullish environment. If we below, we are bearish. And really important are the crossovers that we can see. So if I see a crossover from below to the upside, it gives me more confirmation that we are leading into a bullish trend. I mean, let's go to crude oil. I mean, it's going down today, but here's a really nice example how you can use it also for a long-term perspective. Let's just take the, give me 1 second. Just let me see. There's the horizontal.
And the bands you have on the crude chart right now?
Moving averages. And I love to use moving average like the 100 EMA on, especially on oil and commodities, where I use on equities 200. But let's have a look here. This is the 48-point level. Crude oil was bullish. I mean, you can see it in the chart as well. But we have been confirmed by the RSE because we never stopped below. We had in October 2021 fake breakout kind of, and you see it here again in August 21, and again on December.
They were always buying opportunities.
They have been always buying opportunities, and that's why I had this in my mind, this chart, and it shows you also on a long-term perspective a really good possibility how I use this RSI 34 and this barrier at 48.
Okay.
Right?
Any other instrument you want to talk about today?
No, that's it. Yeah, I'm sporting some seasonal patterns in Forex, and we are here at ForexAnalytix. So Euro, Swiss crowns, USD, Japanese yen. So what I do, I spot the seasonal setups or ideas, and then I try to combine them with technical analysis. So somebody
and
who
is this
thinks
seasonal for like the month or quarter,
yeah, exactly,
it's for the month, right?
For
like
the month,
February.
Right, for February, but you can extend it and look for, these are only short-term seasonal patterns that I'm looking on, but you can also look on long-term seasonal patterns. But what I always say,
the yen will get up to 117.40 then with your seasonal.
Yeah, exactly. And what I want to say is seasonal patterns, please do not trade them blind. I mean, you need always other factors as well to check.
Yeah. Well, you know, Salah, another great interview. And I know that people that have watched you, heard you today live, are going to want to know where they could reach you and follow your work. Also, when people see the video after you retweet it.
Great.
What's the best way on Twitter to get a hold of you?
Absolutely. On Twitter, I'm on a daily basis. I'm updating you with my analysis, with my trading ideas in major English.
Follow Salah.
Yeah, and follow ForexAnalytix, of course.
Yeah. Follow Salah. Okay, Kareem just did, and he has. You'll learn from Salah. It's not just, buy it here with a stop here, and here's your target. You'll actually learn some techniques and methods.
Exactly. And if you have questions, guys, please, thank you, Dale, because I love to educate. I learned trading by myself. There was nobody who could teach me. Even I have a master degree. Trading is not something that you can learn only on books.
Yeah.
And feel free to ask.
You need a trail guide down the rocky road of trading, right?
Right. Absolutely.
Well, listen, Salah, happy birthday. I hope it's a great year for you. I love having you in the rotation. And every time I talk to you, I learn something from you. Thank you.
Thank you, Dale. Have a nice
one. So
thank you, guys.
Salah Bouhmidi, follow him on Twitter and learn from a guy who learned on his own. And I guarantee you he paid for it with blood, sweat, and tears.
Definitely.
Like all of us. We went to the University of Hard Knocks.
Right.
So thank you, Salah.
Thank you, Barry.
All right. And everyone, you could join the team in 20 minutes on the Morning Edge. And then the special webinar that ForexAnalytix is having is going to be at 11 a.m. So I'll see everyone. Good hunting the rest of the day. And remember, don't just count your pips, count your blessings. And we'll see you tomorrow. Thanks again, Salah.
Thank you, Dale. Bye-bye.
Bye-bye. Adios, everyone. You're welcome, Alexander, Kareem.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.